What up? So today's trading tip is gonna be about a way how to compound your equity even more rather than following a linear suit of growth. So it's basically kind of like a trading brain hack that you can use to really elevate your game to the next level. And it's essential because most traders are just growing their trading accounts in a linear fashion. Like they win one, they keep going up by one step at a time, right? Like if you win one, you might win 5%, 5%, 5%. But as soon as you lose, like or have a losing streak, you're gonna wipe out all your profits. And that's why many traders often fail to achieve profitability. But today I'm gonna be showing you guys a tip which can really overcome that. So yeah, all this is covered in detail in Pipionaire systems. But yeah, we'll go over the gist of it. So essentially, it's staircase trading. You basically start at one stair and then you go up. So traditional trading, it's very linear, right? People start at this square, whatever the balance may be, right? It could be 10,000, 100,000, $1,000, even $100. It doesn't matter, right? So generally, traders might risk 2%. So they might risk 2%, and their risk reward is maybe one to two, 1 to 1. So they might go up like 2%, go up 2%, go up 2%, and as soon as they have a losing streak, they wipe down all their profits and come back down. And this way of trading is not really profitable for most people, and that's why 95% traders lose, right? And there's only 5% traders, or even less, that are successful in the game. But the way we're going to be approaching trading, the way I've been approaching trading, is in a very staircase type of fashion. It's like exponential growth. So that way your profits compound more, so you have more room for error, more room for losing streaks, and still maintaining the profits that you work for on your account. So in this way, we basically, for each trade, we'll be climbing up maybe 2 or 3 steps, and then if we lose, we come down only one step. If we lose again, we come down one step. And the next trade we might win, go up 3 or 4 steps. If we lose, we come down one step. If we lose again, we come down another step. And then again, a winning trade comes and we go up like 3 or 4 steps. And this way, it compounds and grows the equity to the exact amounts you want. And it's good for exponential growth because even with losing streaks, like you'll only come down one step, but on your winning trades, you'll be going up 3 or 4 steps, sometimes even five, sometimes even 7 or 10. But you guys are probably confused right now, but I'll explain it a bit better. But this is just the gist of it. So I like to call this staircase trading. So essentially, this site can help you calculate exactly what it is, and I'll help explain what it is. So just to get to the site, you can just Google this term over here, juros compostos, and once you Google this, it'll come up. It'll be the first link. So yeah, so over here you plug in the initial value of your account. So for an example, let's say we're doing $100,000 account. You can do it. Actually, we'll make it a small account just for the sake of it. We'll make it $10,000. One, two, three. So yeah, it's $10,000 account. So this is our starting balance, and over here, this is the amount you're gonna be risking. So with this method, you're able to risk even more. And I'll give you guys two brain hacks for this one. Like one will come at the end of the video because it's not gonna make sense if I give it right now. So let's just say we risk, for example, 5% per trade. That's what I do personally, right? So 5% per trade. So this is the risk and this is the initial value. And over here is the amount of trades or the amount of steps. So let's just say we do 50 steps. Each step could be considered a trade, but it's less than a trade. So in just 50 steps, your account will go from $10,000 to $114,000. And yeah, it might seem kind of crazy right now, but I'll explain. So basically, you start over here at step number 0. So this is basically the initial step. This is right over here at step 0. So you start at step 0, and this is the amount of the account. So essentially, you start at step 0, but the risk is gonna be over here. So step number 1. Excuse me, my bad. So yes, $10,000 is your starting balance, and you're risking this number, whatever is juros nome. This is the amount. I don't know what this means, but this is the value that you're risking, $500. So this is just a decimal. They put a comma here, but it's a decimal. So you're risking $500, which is 5% of the account. So suppose you win this trade, you're gonna be going up to the next step. So suppose your account balance is $10,000 and you're doing 1 to 3 risk to reward. So if I win this trade, I'm gonna be winning 1.5k. So that's $1,500. So my account is gonna be at 11,500. So now I go to here. So 11,500 is right around here. So when the account is 11,500, I'm gonna be looking at this column. So now I'm gonna be risking 550. So basically, from that trade with 1 to 3 risk to reward, I go up 2 steps. But if it was 1 to 4 risk to reward, I would have gone up 3 steps. And if it was 1 to 5 risk to reward, I would have gone up 4 steps. It's always one less. So that way you can suppose I won this trade 1 to 3 risk to reward, and suppose I lost the next trade, I would go down one step. I would be back at step number 2. And if I lost another trade, I would be back at step number 1. nonetheless still in profit, or at least I break even. But most likely, suppose we're at step number 3, and now I win my next, like I risk 551, and I win 1 to 4 risk reward trade, right? So that's 551 times 4 plus the balance at the time was 11,500. The account would now be at 13,700. So that puts us right around between here. It's between steps number 6 and 7. So I always round it off to the lower one just because you'd rather risk less than risk more. So now you're risking 638. So see, in just 2 trades we climbed up to 6 steps. And just like this, like even if I suppose I lose this trade, like at step number 6, I'm risking 638, right? So if I lose this trade, I'm gonna go down to step number 5. So now for that trade, I'm gonna be risking, once my balance is here, I'm gonna be risking 607. Suppose I lose this trade as well, I'll come down to step number 4. And so this way, like I was saying before, you can go up multiple steps, but on the downfall, you're only coming down 1 step. So it saves you from blowing your account, and it helps you really compound your equity, because losses are inevitable in this game, right? So you want to be ready for them at all times, and you don't want to have one loss fuck up all your profits. Excuse my language. But yeah, so suppose you're at step number 4, you're risking 578, and now you win a trade that's 1 to 5 risk reward. You know, because those trades happen 1 to 7. You guys probably saw in my Pipionaire trading history video 2019 that a lot of my trades, they hit 1 to 5 plus risk reward, 1 to 10 even sometimes, right? Like 1 to 10 would give you would be up 9 steps. So from 4 you'd be up crazy steps. You'd be around here somewhere in just one trade, right? But that's the power of compounding and the power of risk reward. But so let's just say it's an average trade. We win a 1 to 5 risk reward trade. We're gonna actually be climbing up 4 steps. So 1, 2, 3, 4. So now our account balance is gonna be around here somewhere. So we're gonna be risking 700 for this account. We're at step 8. Suppose we lose a trade, we're gonna come down to here. Suppose we win a trade, we may come up here. We lose, come down here, win, and so on. You drop a few and then you jump more. Drop a few and you jump more. Just like the ladder method I was showing you guys earlier. And like that, you can just compound your equity a lot and keep coming all the way up higher and higher and higher. So that's the gist of juros compostos, just compounding your profit. So that's the gist of it. And this way, it's a good way to look at trading, because instead of just risking this first of all gives you a visual of your targets for the future. And it also gives you more security, because even if you're over here and you lose a trade, you know you're only going to come down to step number 7. So it doesn't really impact you. You know you're not, there's no chance of you blowing your account, because you're only risking this exact amount. If you risk more than this, then that's your flaw. You know, that's self-discipline. It's not with your trading systems. That's a flaw within yourself that you must master before achieving profitability. And that's also key. Managing risk, that's like, I don't even got to say it. All traders should already know this. And if you're a beginner, now you know it, right? Like, risk management is key. If you don't manage your risk, yeah, you might make... Beginner's luck is a true phenomenon. It happens with me, happens with almost every single trader that I've spoken to. So yeah, risk management is key. You learn it the easy way or you learn it the hard way. The choice is yours. But yeah, so this way you can compound your profit a lot. You just keep climbing up the steps. You drop down maybe 1 step and you climb up 3 or 4 steps. And you can see in just like these 50 steps, because it's not 50 trades, because each trade you go up like 3 or 4 steps. So this might actually be only like 30 trades. But in 30 trades, you can compound your profit or your account from $10,000 to like 6 figures plus. That's just an example, right? If you're obviously, you can make this number even higher, you can adjust your risk and so on. So that's the first part of the video. So the second part of the video is for my high risk traders. I don't do this for every account, but I do this for challenge accounts only. Accounts that I'm willing to maybe even lose a significant sum of capital on at the beginning, potentially. Not always, but potentially. I'm aware of the risk. So I would never trade high risk without being aware of it, because otherwise you're going to be asking to be emotionally detrimented. I think that's a word, but yeah, emotionally you're going to be impacted and you're going to make bad decisions. So this is a 5% risk. You can even do it with like 2% risk for beginner traders, or 3% risk, or even 1%. Even then, the profits are pretty exponential. It's from 10,000 to 26,000, 27,000 nearly. So that's like nearly that's like a 270% gain, which banks will never achieve in even like 5 years, I would say, because they do maybe like 10% a year at the best. If you get a really, really awesome bank, then you might do 10%, but it's way less than that, usually like 5%, 6%. So yeah, even these returns are exponential, but of course we're high achievers. We aim for way crazy returns that are beyond what any bank can gain. And you guys can just see that based off my video of the 2019 trading history, where I go over every single trade from the start to finish with 5% risk, and you guys see the exact growth. So the proof's in the pudding. I don't really got to say it more. You can just watch the video. But yeah, getting back to topic. So this is for my high risk traders. Like, suppose you start with $1,000 account. Instead of $10,000, you're like, fuck it, you only have 1,000, or you're only willing to lose 1,000. You don't want to waste the 10,000. So suppose you have 1,000. So suppose you want to risk 15% per trade. I wouldn't recommend this for all traders. I will only recommend this for high level traders like myself and traders who have really backtested to perfection and they know have a profitable system over thousands of trades, over like maybe at least 1 or 2 years of chart time minimum. I would recommend even more. It depends on your work ethic and the amount of chart time you put in and your skill set in general, right? But yeah, I wouldn't recommend this for beginners at all. Don't even risk more than 5% if you're a beginner, because you're gonna probably blow your account, and I don't want you guys to do that. So this is for my my advanced traders. So suppose you want to risk 15% per trade. Instead of doing it blindly and just risking 15% per trade, suppose you open 3 trades and you lose them, you're gonna lose so much equity. You know, you're gonna nearly blow half your account. You'll probably get margin called at 50%. But yeah, so suppose you want to risk 15%. This also gives you like, look, with even a $1,000 account in 50 steps, your account will be at a freaking $1,000,000, bro. $1,000,000. So a little bit more risk, but you have 10 tries. Instead of doing 10,000 balance, you can do it 10 times, but 10 different tries, right? With 15% risk. And your results will be like 10 times what you normally would have done, if you get the gist of that. So it essentially works the same way. You start off at step 0. So it doesn't matter, right? Because don't even look at the money you're losing, or like the money does not matter. The risk does not matter. All that matters is these steps. My bad. All that matters is these steps, like this row over here, 1, 2, 3. Like don't even look at this. Cut this out if you need to. You know, I'm covering on my hand. You guys can't see, but yeah, don't look at this. Like all that matters is this. So a brain hack for this would be, maybe suppose you have $1,000. Start off with maybe, let's say, suppose you have $1,000 account balance, right? Put 700 here and click calculate. Whatever, 674, whatever, fuck it. Excuse me once again. So the balance is 674, but your account balance is 1,000. So if your account balance is 1,000, you automatically start off over here. You are automatically starting off at step number 3. So it's like a brain hack because it's not really in profit, but for this game, it doesn't really matter, right? It's like you're at step number 3 because your balance is step number 3. Fuck the beginning of it. It doesn't matter. So you're at step number 3 and you're risking 133. So if you lose a trade, you're gonna go to step number 2. If you lose a trade, you're gonna go to step number 1. And then suppose you win now, win 1 to 4 risk reward, you're gonna go up 3 steps. You'll be here, you know, and then that way you stay on the board. You don't get wiped off the board. You're always on the board, and all that matters is climbing up these steps. So this is a brain hack because you basically start off in profit already. You start off, even if you're not truly starting off in profit, for the purpose of this, you are starting off in profit. You're starting off at step number 3. You know, you can make it even more. You can, if you need more room for error, you can put the initial value at 500. The profits are still exponential. You know, $500,000, more than $500,000. So the profits are still solid. Suppose you have $1,000. Now you're starting off at step number 5. So you have to lose 5 trades in a row in order to come back to the initial balance of this calculator. Obviously, you're going to be down 50% equity, but don't worry about equity, because if you're worrying about the monetary value of money, it's going to be very tough for you to blind those emotions that are related with money, which is going to cause you to make unrational decisions when you're trading, and that is going to be detrimental to trading. And that's why banks and hedge funds do really well, because a lot of the traders, they're not associated emotionally with the money. They don't really care. You know, it can go up or down. It doesn't affect them emotionally. Therefore, they can make better trading decisions. The same goes for me. I don't really care about the monetary value up and down in a day, in a week. It doesn't matter, because I know in the long run I will be profitable inevitably. It is impossible for me not to be profitable over the long run. It is not possible. So yeah, because the word "I'm possible" is literally saying I am possible. So that's bad connotation. I don't want to use that. But yeah, so this is like the hack. So you start off at step number 5, and then the same thing. You know, you lose a trade, you come down here. You win a 1 to 4 risk reward trade, you climb up 3 steps. 1, 2, 3. You're here now. Suppose you win another trade, 1 to 5 risk reward, you climb up 4 steps. 1, 2, 3, 4. Suppose you lose a trade, you come down here. Suppose you lose another trade, you come down here. And now you win a trade that's 1 to 7 risk reward. You know, you have a big winner. You climb up 6 steps. 1, 2, 3, 4, 5, 6. Now you're at step number 15. And like this, you keep climbing the steps, and in just a little bit of time, you exponentially compound your profit, and you can get to step number 50. And the risk stays the same throughout. So it doesn't matter if you're risking 15%, because truly you're not risking 15%. You're risking 1 step at a time. So that 1 step, it doesn't matter if it's 15% risk, 10% risk. The money does not matter. Don't look at that. All you gotta know is you're risking 1 step. you know that if you lose from here, you're losing one step. If you lose again, you're losing one step. But you do know that once you win, you're gonna be up 3 or 4 steps. That's why I call it staircase trading, because you're climbing up 3 steps, you might come down one. Climb up like 3 or 4 steps, you come down one. Come down another one. Climb up like 5 steps, and so on, right? And you keep on exponentially growing your account. And this way you don't. This way you learn to not value the money and the monetary value as much. Like value the money, but you're not emotionally attached to it, right? Because in your head, all you have is a step. You can go to sleep and knowing that you only risked 1%. You only not 1%. You only risked one step. So the risk does not matter. So this way, this is a way to do high risk trading with technically it's going to be low risk, but it's high risk just for the sake of considering 15% high risk. But technically, you're only risking one step each the whole process. You're only risking one step. Oh fuck. But yeah, you're only risking one step regardless. So you can even make this profit. You can even make this to 25% if you want. If you want to go crazy with it, and your account will be at 35 million. Obviously, as you get to the later steps, I know you guys get like if you have $5 million account or $6 million account, and you're risking $1 million. I know it's gonna be tough for most traders. Maybe 0.001% traders might be like myself, like Pipionaire, and might be able to do this type of shit. To be honest, I wouldn't even risk 25%. I risk like 15% max. Even 10% is more than enough. But obviously, for people who have smaller accounts, like someone who has $100, like maybe someone might have like let's say someone has $100 account. Fuck it, you only have $100, whatever, you know. You can maybe put $50 here, and for then you can really do high, like so yeah, you do $50 initial, and then actually let's make it $60, and then you can make this a bit more, make it like 60 steps. And so yeah, from just $100 you can grow it to $40,000 over 60 steps. So basically, since you started the initial at $60, it's like a brain hack, right? Because you don't want to start off at 60 and put 60, because if you lose, where the fuck are you? You're nowhere. You're like negative steps, and that's where your emotions are gonna kick in. So rather, if you have $100, you'll start off at around between step 2 or 3. So let's just say you started up at step 2, you're risking $18. So if you lose a trade, you come down one. Suppose you win this trade now, right? You come up 1 to 4 risk reward, you climb up 3 steps, 1, 2, 3. Now you're here, and the same thing. You know, you lose one, you climb a few. You lose one, climb a few, and even from just a small $100 account, your profits are going to be exponential. In just 10 trades, or in about like 13 trades, it's gonna be you're at 4 figures already from a $100 account, and that's crazy returns. You know, that's 10 times your return. It's 1,000% return, and like this is like basically unheard of by banks. You know, this is kind of like a really really good trading secret. I'm giving it out to y'all, so hopefully you guys can use it. But in order for this trading secret to be actually validated, you need a solid skill set, because you can't be a loser and not be able to catch like 1 to 5 risk reward, 1 to 3 risk reward, and expect to be profitable. Because if you're doing 1 to 1 risk reward, you're gonna be going up one step, losing one step, losing one step, and you're gonna stay around the same area. But if you're using high risk reward like I do, 1 to 5 minimum, you climb up like 4 steps. You lose one, you might lose another one. It does not matter, because you're risking only one step. And then your winners, you compound your profit. And then just from $100 account and 60 steps, you can just see the profits. Like in just like what, in 33 trades, you're nearly at $100,000. Word to Nipsey Hussle. The marathon continues. I'm gonna leave it at that. So hopefully this video can help you guys out, and see you guys next time. Peace out. Pipionaire out.